Hello, everyone, and welcome back to the J22 report. I'm your host, Johnny Market. You all know that drill. Hit that like button, subscribe if you already haven't. Just want to do a little disclaimer. All these videos are for informational and entertainment purposes. It's not to be construed as investing advice. I can't guarantee performance or results, and investing involves risk. So, anyway, let's get into today's action today. Believe it or not, if you were lost in it, the today's action, you see the stock market tanking. But if you actually look at today's data real quick, the S&P PMI 54.3, that was actually below the consensus. S&P Global Services, that was below the consensus again, 55 instead of 56. IMS Services PMI, that was a little bit above the consensus, 51.4. But today, that did not matter because the jobs market triggered really bad continued selling. Look at the S&P, that's down 160 points. And this was up. If you actually look at it, let's go to let's do a 5-day chart. This was up at 54, almost 5,500 at one point. That's quite, if you look at it here, 54.82, that is quite a drop. You look at the Dow, that has gone below 39,000. I was talking about that 40,000. And who knows, maybe that is a top, the 40,000. So look at it at one point, 40,759. The Dow. Now it's at 38,703. So that is quite a loss in the Dow, all stemming from the poor jobs numbers. Look at that, Wall Street sell-off concerns over U.S. economy. Let's actually click at that. Global stock rout deepens as Dow plunges over 1,100 points. S&P 500 and NASDAQ sink 3%. So really bad news for the stock market. One of the good news about this is gold, which I think we're seeing margin selling, but it's below the that 2,400 mark is still maintaining, and that's why I still think it's in the consolidation phase. It's getting ready to go up, and I think it will make a run. And this is what's happening to the stock market. This going down, this is very bullish for gold, especially with the margin selling. If you look at a lot of the big runs, I went to 2000 run till 2008, that goes up. And that was the beginning of the new bull market. And then 2008 crisis, that went down, that went up. That was the 08 crash, and then there was a big run after that. So this stock market going down, people losing faith, that new money is going to go to gold, doesn't go to money heaven. So this is very bullish. In terms of the stock market, I actually am not sure if this was the top. I'll tell you why. We're going to go in, we're going to get into a lot of technical analysts or cycles analysts or Elliott wave technicians say 6,000, but we're going to go into some of the articles why. But anyway, let's get into the news today. Here it is. Buffett's Berkshire Hathaway cuts massive Apple stake by nearly 50%. Yeah, remember when they were trying to put spin on the Bank of America, saying Bank of America, oh yeah, he's just selling that because, maybe he's just profit taking. Yeah, no one sells like that for profit taking. every day for like the 12 consecutive days. So Buffett has slashed his gigantic stake in iPhone maker Apple by nearly in half. Oh yeah, there's nothing to see here. No, he just literally cut his position in half. If Buffett likes something, he doesn't cut it in half. I'll just tell you that right now. I don't need to read Buffettology to know that one. I actually read Buffettology, but a long time ago. So let's see more. Slashed about 400 million shares from approximately 789, reduction of 49.3%. Yeah. Annual meeting in May had expressed confidence in Apple and most likely remained the conglomerate's largest stake by the end of the year. Yeah. Yeah, I bet you someone was whispering into his ear what's really happening. So he gets information, me and you. But if me and you, get info and we decide to trade on it, yeah. Yeah. Perfect. They throw the book at us. I'm sure someone told him something. So uh oh yeah, it's been trimming stake in Bank of America. So of course overall cash pile swelled to a record. So record amounts of cash, selling Apple, selling Bank of America. What does he say? Always buy USA? Yeah, what a liar. Anyway, that's enough. And then here it is. For a little history lesson, I wonder if this is a Alan Greenspan resign. Senior economist A. Gene Sperling, who cares? Stupidest economist ever, is leaving the White House to work on the yeah, so basically resigned. I wonder if this is a yeah, the economic who's an economic advisor? Let's see. Senior economist. So yeah, leaving, resigning right before. I wonder if this is a Greenspan resigning right before bad thing. So anyway, I wonder if this is a Greenspan. We'll see. Of course. And then here's more stuff. Just want to say Fed emergency Chicago. So anyway, yield curve between twos and tens uninverted for the first time in over 2 years. So here it is, more time uninverted. Generally, that's a sign of recession where it inverts and then that is best indicator of recession. So anyway, and so here's the two things I really wanted to talk about. Wharton's Jeremy Siegel says the Fed needs to make an emergency rate cut. So yeah, there you go. Wharton School of Business. Fed funds right now should be somewhere between 3.5% and 4%. The Federal Reserve kept interest rates at 5.25 to 5.5 after its meeting. On Friday, jobs reports slower growth than expected and unemployment rate that moved higher to 4.3%. So basically called on the Federal Reserve to make an emergency 75 basis point cut in the federal funds after the disappointing job market. This is what people don't realize. They can't just willy-nilly cut rates anymore. This isn't last decade. Inflation's going to let its genie out of the bottle. It's left the genie out of the bottle. In addition, there should be another 75 point basis cut indicated next month, and that's minimum. So The Fed funds right now should be somewhere between 3.5% to 4%, he said. This would be unusual, although not unprecedented. So how much have we moved the Fed funds rate? 0? He says that doesn't make any sense. So anyway, look at it. He is not concerned that an emergency rate cut will send the markets in a downward spiral. In fact, he thinks the markets will welcome the cuts and rip higher. We'll see. He might be right, but then again, it could. I think instantly it would. But over time, it would juice up the markets probably. So Greenspan made an emergency 50-point basis cut in early 2001 after not cutting at the December 2000 meeting. And the market rallied shortly. Yeah, but when was that? Wasn't that around? I don't know exactly when, but if that was around 9/11, then I can see why. So here it is. If the Fed does not make an emergency cut before September's meeting, the market will react badly. So there it is. And more news, Chicago Fed President Goldsby says the economy is deteriorate, the Fed will fix it. So Chicago Federal Reserve, so let's see anything more. Where the weakening labor market manufacturer sector could prompt a response from the Fed. Goldsby did not comment on specific course of action, but said it does not make sense to keep a restrictive policy stance if the economy is weakening. Look at that. Maximize employment, stabilize prices, and maintain financial stability. They used to say it was a dual mandate. Now they're unofficially giving themselves another mandate, maintain financial stability. I wonder if that means something's coming. Let's see. We will find out. So anyway, that's all. Is the reason I'm showing you this stuff is, some of this was just showing that oh yeah, Starbucks sales. Forgot about that. Starbucks sales slowed. So let's see if I can get that again. Let's see. Share the screen. Let's see Starbucks sales. Let's see. Well, there was one other thing. Starbucks sales closing. That's declining again. But anyway, this just goes to show the Fed, if you listen to this channel, it's going to reverse course. Not because it wants to, because it will have to. Was I a little early? Probably. But you know what? I was right. The Fed will not be able, it will have to reverse course. And that's when gold, I think, is going to make a very big run and get up to that 3,000, maybe even more mark. So we're seeing it here. As I said, either the economic data is going to look horrible or inflation is going to run very rampant. I don't think this is, think, I don't know if there's a crash or not, but they're in trouble. And this is what people don't understand. The Fed's trapped. Either have real runaway inflation or crash the economy. And right now, the Fed's playing chicken, and I think it's going to reverse course. And you see all the evidence. Fed needs an emergency rate cut from the Wharton School of Business. And what's the last one? Oh, yeah, Chicago Fed. If the economy's deteriorating, we're going to fix it. So anyway, they've all but told you they're going to reverse course. if anything comes. So anyway, that's all I have for you today. Hit that like button, subscribe if you haven't. If you listened all the way through, thank you very much. And I'll see you next video.